Hey everyone, and welcome to today's Explainer. So, if you're a secondary student looking ahead to that very first career, there is one adulting skill you absolutely have to master, and that's decoding your future payslip. Today, we're unlocking the Zambian tax system using the fresh 2025 data. The goal here is simple. We want you to take control of your money from day one so you can step right into the professional world with absolute confidence.
Here is our roadmap for this session. We'll decode your payslip, navigate the payee tax bands, understand your NAPSA benefits, compare tax planning versus evasion, and then wrap the whole thing up with a quick knowledge quiz. Let's get right to it. Okay, let's dive into part one, decoding your payslip. Because before we can build wealth, we have to know exactly where our money goes. Right off the bat, there are two critical terms that basically dictate your financial reality. First up is gross income. That's the big number. It's your total earnings, including your basic salary and any allowances, before absolutely any deductions are made. Then you have net income. This is your take-home pay, the actual money that lands in your bank account after mandatory statutory deductions are taken out. Getting a solid grip on this difference guarantees you are never caught by surprise when payday rolls around. Now, here is the absolute golden rule of Zambian statutory deductions. The sequence really matters. You always start with your gross income. Then you subtract your 5% employee NAPSA contribution, and only after NAPSA is removed do you arrive at your taxable income. This is absolutely crucial because it means your NAPSA contribution legally reduces the amount of income that the government can apply income tax to. Moving on to Section 2, navigating PEE tax bands. Let's look at how progressive taxation actually works in practice. So this is how the 2025 progressive tax bands break down. And I really want you to focus on Band 1 here. For the 2025 charge year, the first 5,100 kwacha of your monthly taxable income is taxed at exactly 0%. It's completely tax-free. That is a massive benefit for all formal workers in Zambia. It's only the income that spills over into the next bands that gets taxed at the higher rates. So 20% for the next 2,000 kwacha, 30% for the next 2,100, and 37% for anything you earn above 9,200 kwacha. It's like a giant staircase. Let's ground this math into a realistic 2025 scenario, say, for a high earner bringing in 20,000 kwacha gross a month. Let's trace the journey of their money. First, 1,000 kwacha goes directly to NAPSA. That leaves a taxable income of 19,000 kwacha. Now those progressive bands kick in. Band 1 is 0. Band 2 takes 400 kwacha, Band 3 takes 630, and Band 4 catches all the rest, adding 3,626 kwacha. This really shows you exactly how income is progressively sliced up, rather than the government just slapping a massive flat tax on the entire amount. Now, what's really interesting about this next concept is the distinction between marginal and effective tax rates. There's this really common misconception that if you get a raise and hit that top 37% tax bracket, suddenly all of your income is taxed at 37% and you somehow lose money. No way. That's entirely false. 37% is just your marginal rate. It's the rate applied literally only to the last few kwacha you earned over that highest threshold. Your effective rate is the actual percentage of your total income that goes to tax, and that number is always much, much lower. For example, if someone grosses 10,000 kwacha, their marginal rate hits 37%, sure, but their effective tax rate, it's only about 12.2%. All right, part 3, understanding your NAPSA benefits. It might feel like money just going out the door, but it's actually your ultimate safety net. There is a critical comparison we need to make here. Both NAPSA and NHIMA are mandatory statutory deductions, but notice the difference. Your 5% NAPSA contribution legally reduces your taxable income, which actually saves you money on PAE. NHIMA, on the other hand, which is the National Health Insurance Management Authority contribution set at 1%, does not reduce your taxable income. Your PAE is calculated before NHIMA is taken out. This right here is one of the most common payslip errors people completely fail to spot. Now check out this specific number, 1,708 kwacha and 20 ngwe. This is the 2025 NAPSA monthly employee contribution ceiling. You see, NAPSA is calculated as 5% of your gross earnings, but it doesn't just scale up forever. If you earn, say, 40,000 kwacha a month, you are not paying 2,000 kwacha to NAPSA. You hit the ceiling, so your deduction is capped at exactly 1,708.20. This statutory limit is great because it effectively protects high earners from disproportionate deductions, all while keeping the pension fund itself totally secure. But let's be real, what does that 5% mandatory deduction actually buy you? Well, it's not just a retirement fund. It buys you comprehensive, long-term protection. It includes an invalidity pension if you're ever unable to work due to severe illness or injury. It includes a survivor's benefit that gets paid out to your spouse and children if you pass away. It provides a funeral grant to help with burial costs. And of course, it provides a normal retirement pension to ensure you have a baseline income when you finish working. It's really a defined benefit scheme designed to protect you from life's absolute worst-case scenarios. Let's transition to Section 4, tax planning versus evasion. This is a vital distinction when you're managing personal finances.
So there is a massive difference between these two practices. Tax planning is proactive and, most importantly, completely legal. It's all about structuring your decisions with tax consequences in mind, like maximizing your allowable deductions, utilizing those tax-free thresholds we talked about, or investing in zero withholding tax green bonds on the loose. Tax evasion, however, is illegal, plain and simple. It involves deliberately hiding income, failing to register a business, or falsifying documents just to avoid paying the taxes you legally owe the government. Legal tax planning is just smart wealth optimization, but tax evasion, that carries severe legal consequences. Okay, Section 5, the quick-fire knowledge quiz. Let's move from just passively listening to actively testing what we've learned. I've pulled a few quick-fire questions directly from the 2025 data we literally just covered. This is the ultimate test to see if this stuff is sticking. Let's see how well you can decode the Zambian financial system. First question. Think about the chronological journey of a single kwacha. What is the correct deduction order on a Zambian payslip? Does pay come first? Does NEMA reduce your taxable income? Take a quick second to mentally lock in your answer. And here is the correct path. You always start with gross salary. First, you minus NAPSA. Then you calculate your PAE tax on the remaining taxable income. Only after that do you deduct your NHIMA contribution. And that final number? That leaves you with your net pay. Remember, NHIMA never reduces your taxable income. Question 2. Let's test out that progressive staircase. Say your gross is $8,000, NAPSA is $400. That means your taxable is $7,600. Using the 2025 bands, what is your total PAYE? Did you get 550 kwacha? Let's break it down really fast. The first 5,100 is completely tax-free. The next 2,000 falls right into band 2, taxed at 20%, which is 400 kwacha. You still have 500 kwacha remaining, and that spills into band 3, taxed at 30%, which is 150 kwacha. Add them up, 400 plus 150, and your total PAYE is exactly 550 kwacha. All right, final question. We established earlier that high earners are protected, but what is the exact 2025 NAPSA earnings ceiling, and what's the maximum monthly employee contribution? Let's test your memory on the key figures. The exact figures are a monthly earnings ceiling of 34,164 kwacha, and since you only pay 5% of that, the absolute maximum monthly contribution an employee will ever make in 2025 is exactly 1,708 kwacha and 20 ngui. It's a great mechanism that ensures fairness across the whole pension system. That brings us to the end of today's explainer. I want to leave you with a bit of a provocative thought. Are you proactively managing your financial future, or are you just letting statutory deductions happen to you? True financial capability really begins the very moment you understand your payslip. Armed with this knowledge of progressive tax bands, NAPSA benefits, and the actual mechanics of your net pay, you now hold the keys to optimizing your finances in Zambia. Keep learning, keep planning, and we'll catch you in the next explainer.